The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another edition of the Power Trading Hour. It is the Bearnado. Yes, not a Sharknado, even though it is Shark Week. It's the Bearnado. It is a market that has headed down even a few ticks, and the bulls cannot even think of a market in which the close is lower than the day before. But we're trading out here about 6 points down, 16 to 91.22 on the S&P cash, just turning to 1 billion shares. The squeezably soft Bearnado, according to Disco Steve. But it is a lighter day out here. We've seen some numbers haven't had a huge effect. Oil numbers came out at 10:30, but other than that, we're going to be very light for at least 2-3 weeks on any kind of economic data. Always a time when many traders, especially Wall Street guys, head off for the Hamptons to try to get their vacation in. Looking at the movement so far, at least for the last 2 days, we've seen a big sell-off in the mornings. They try to rally in the early afternoon on no volume, and normally close somewhere in between the high and low of the day, but a lower close. And the question is whether or not we've got a market that I tend to call a paper cut market. Have you ever gotten that paper cut and it doesn't bleed a whole lot, but it bleeds a little and you just can't stop it? It seems like no matter what you do, applying pressure, putting super glue on it, although that works most of the time, just slowly there, you just got a little bit of blood seeping out. And sometimes you get into these markets one way, either up or to the down, and you get into these little markets that strip, drip, drip, and no real volume out here as we pull back, and I don't think there's going to be an earnings report or a economy report or news that's really going to move this market for 2 weeks. So that is the question of how this market is going to set up when there's not a big wind blowing one way or the other in the market. What we do know is a very light volume. We've not seen those people come in the last 30 minutes and bid the close up. And I'm wondering if we see that yet again today. We got to a low of 1648.91 on the S&P cash. So we're up, 5-6 points off the bottom. But it's been a very rudderless, and I would compare them to the doldrums. If you've ever been sailing, S-A-I-L-I-N-G, the doldrums were where the Coriolis effect at certain latitudes made the wind pretty much nothing as you were crossing when you were going across those, sailing from the old world to the new world was always an adventure, because if you caught one of those wrong, you could be stuck with little or no wind for weeks and be stuck and just sweating out there in the Pacific and in the Atlantic too. But not a whole lot to report. We did talk about Tesla yesterday, or at least electric cars. We've got Tesla earnings after the bell tonight. They are pushing those down pre-earnings out here. Let's see. No, hang on a second here. What do we have? It's off 5%. Let me get a better look at it here. There we go. There's some gaps. Probably the biggest one is this $55 to $70 gap down with a volume, and I think probably eventually this stock is coming back. Had someone come in and ask about buying options on that yesterday. You're down 7. of course, the first thing you want to do is look at the implied volatility at these stocks. And implied volatility, I'll look it up during the break. I think it's 100 or 120. So the chances of you ever making the spread on this are probably infinitesimal. But you've got a gap down here about 125. Most people are looking for probably inline or less than inline earnings. If you remember last quarter, what did they do? They went out and asked customers that were on the edge if they would go ahead and buy their car right then, several days before the end of the quarter, to squeeze those in the last quarter. Why did they want them in the last quarter? They had a offering of more stock that they had to push out the door to get enough money to be in this for the long haul. And they didn't really care in the short term if the stock went down. And there's a great deal more stock out there. And, of course, the underwriters of that offering made another ton of money pushing out secondary stock. Of course, right now, or at least yesterday, they'd have to be selling somewhere around 350,000 cars a year. They are selling about 25,000 cars a year. That's about all they can do without buying new factories, new equipment to make those new cars. And, maybe they do have something hidden like a killer app, a battery that will solve all their problems. But to this point, no one is even alleging that or even got a rumor of it. We have seen the last two legs, energy, come off a little bit, about 10, 15% on this last leg up. But it is down, and I'd say significantly before earnings, 5%. We're seeing a lot of other stocks out here roll over and try to kick some of the shorts off at the top. And we'll be talking about those maybe a little later in the day. But for the most part, the selling energy is over for at least probably till 3 o'clock, and just not seeing any kind of real volume come in to move this market. Like I said, down 6 points on the S&P cash, and we've just cracked 2 billion shares, which tells you just how slow this market is. And you're probably not going to get a lot of movement after the first 2 hours and before the last 30 to 45 minutes of the day now. We do have some other stocks, kind of interesting movement. Amazon is one. Of course, they bought a newspaper in Washington, D.C. Really unclear about why they have. A lot of people are saying why they have, but we haven't heard it from Jeff Bezos, whether this is part of a strategy to get in to the news and search business. My guess is that why they haven't directly competed to this point, except in the cloud space, Amazon is looking at Google as its main competitor, and at least on those things, not mail order. And I suspect they are looking at probably that business too, as all folks are. But to this point, Amazon has hit its high. It is starting to pull back. It did have earnings. They were somewhat ambiguous, but we've seen this now in IBM. Amazon is fairly much confirming today, and that is that you can have a lot of volume. It lasts for one day, and then it's over, and the stocks roll back over. But Amazon certainly looks that way and looks like it wants to come back at least to the 284, 285 level. Amazon, of course, following IBM's lead. We've been talking about IBM getting down to this level for some time. And it's actually set up a nice ABC down, but we do not have the volume today. It still needs about another 40 cents down to tag the April 22nd low of this year at 187.68 at 9.8 million shares. So actually this would be the first indication that IBM is going to get some kind of support around here. There is one more gap. It's down about 180. Go back a little bit farther here, take a look at it. 181. And could it get back into that and tag that? The answer is probably yes. That wouldn't be too much a stretch on it. But very interesting that energy is already picking up to the downside on IBM as some of the other companies out here. Let's see, what else do we have? Let's see what else. Just looking through what's in play here. Probably the most interesting thing overnight, although I didn't hear a lot of people talking about it in the infotainment space for finance, and that is that Japan was off 4% last night. And you could probably drive a truck down Wall Street and not hear anybody talk about it. FTSE was off 1.4%. Germany was off 0.5%. The rest, up 0.5% in Spain. Portugal up 0.4. Italy up 0.9. Ireland down 0.5. And I guess Greece is closed today. Other stocks of interest that have been moving out here was First Solar, FSLR. I suspect that some of the weakness that we saw today in Tesla is because First Solar not only disappointed, they warned. Again, all of these companies, I wrote about it in the Tech Insider several months ago, that all these companies do not make money. The only way that they exist is government subsidies, that they are not anywhere close to being competitive with coal power or even a natural gas powered plant. Over time, problems with solar cells are that they only last about 10 years. At that 10-year lifespan, they are producing about 30% of the energy that they would the first day that they are installed. So they do taper off over time. And, of course, the lifespan of 10 years just isn't quite enough now. Of course, during the night, they can't produce any power. So you got to have some way to store them. And that gets right back in the discussion we had yesterday about Tesla and all electric cars having to have batteries that are too expensive and that wear out too soon. There was always that disruptor that comes out, normally out of the blue, with some kind of technology that actually will make that happen. But at the core of every one of these issues is longevity and energy storage. The company that can answer that question will be the real Tesla. They'll be the real First Solar, and they'll be the ones that you want to buy and own for a long time. It just does not exist yet today. So we will be back in a minute.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, I'm unsure why Disco Steve decided to play the first song ever played on MTV. Not really disco. And, I don't know, new wave, punk. Anyway, we are, maybe he's wondering about who killed the radio star, is because of the slide I have up now, which is who killed the electric car. And that is... what do you have? A documentary made in 2006. It goes through all the times that the electric car has come and gone because the technology has not been there. The first car ever made was an electric car. So very interesting. They actually have the same guy that did this one did a later one called Who Saved the Electric Car, or The Revenge of the Electric Car, that came out in 2011. But it still is one of these technologies that is before its time, and have, after working in fuel cell technology, the old joke in fuel cells was always, it's the technology of the future and always will be. And why I don't think this is true for cars, it certainly is right now, until someone comes up with something that beats the current technology out there. So we'll be watching Tesla to see whether or not they've reached a saturation point. My guess is that if they don't do it in this quarter, that they will do it in the next quarter. There's only so many people that are willing to buy a $79,000 car with a range of 210 miles. Anyway, just a little thought out here. We were talking about First Solar just because technology before its time, it's down on fairly significant volume, actually right back down to the huge move it had back on the 9th of April when this thing came up on 40 million shares. So we are back into that candle, and it's probably going to offer at least some level of support down to just in the mid-25s. But the outlook and the numbers were pretty drastically bad. We're doing about half the volume of that big candle. But I'm wondering whether or not anybody's going to come up with a story that keeps some of these high flyers that don't have any real profit out there flying, and it's going to be tough. What else did we have moving out here that was interesting? First Solar, Soon, S-U-N-E. Of course, you can always call me at 877-927-6648, and you can always email me, and hopefully if I get it before the end of the show, PATH at TFNN.com. I'll try to answer it if you can't get to the phone lines. But what do we have on this one? Sunland Entertainment, not really familiar with this stock. Let's find out a little bit more about it, other than it's getting a slam today. It closed about, 980, 975 last night. Looks under a 750 now. Sun Edison. It says Sun Edison. Boy, this is horrible. S-U-N-E. Nothing is right on this. Very interesting. Electronic Materials engages in development, manufacture, and sale of silicon wafers. The company also develops and sells photovoltaic energy solutions, operates in 2 segments. See if there's any information out here about this one in the headlines. Just looks like no, I guess they did have earnings last night. Sun Edison, post-Lawson Solar Unit. Okay, so it's a little clearer. They are one of these solar companies that I was unaware of that makes the backing or the silicon backing for photovoltaic cells. See if there's anything here I'm looking at that would really bring us in. Projects under construction increased in Q2, blah, 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 blah. I can't see why anybody would do anything like that. Other ones. See if we had Tesla. Ralph Lauren off 6.5%. Interesting. We'll try to catch this one on the way back. Again, you can give me a call, 877-927-6648, on a day that's fairly quiet right now.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And one of the denizens of the den brought up Clean Harbors. Going to take a look at this one. They came out with earnings last night, down fairly significantly, where they close out at mid-57s yesterday, and up about 53 now, just underneath it. Went as low as 50.50, something like that, $50.50. They went back down to where long-term support is, and the highest volume open to this entire movement sideways that goes back to October 31st of last year, when the thing came up with 2.8 million shares. Probably not going to get that today. This gap that has extended since then, that October move of last year, has continued through today, and it went right back down to this low. But of course, the last couple lows, well, you had a 2.6 million share low that spiked through that on March 1st. Volume was pretty good that day. 2.6 million shares. So what do we have today? 1.6 million shares. So this looks like it would be set up in a trading range from about $50 to, or $49 up to 59. I'm just wonder how many more times this thing can hit the bottom with increased or significant, decent volume on the low end before this thing breaks down. If you, I read through the earnings last night, and it really seems like the executive staff is somewhat pessimistic with what they see in the future, but this thing has bounced off significantly off its low, but I suspect that with the volume today, we should at least look for this thing to come back and test $50 again. If you're not familiar with Clean Harbors, they do a lot of the back work of cleaning up oil spills, hydraulic fluids, fracking liquids. They do a lot of the cleanups for the oil drilling companies and other services too. But their big thing is keeping, as their name suggests, clean harbors out there. We'll see. RNF. Look at this one. RNF. Rentech and Nitrogen Partners. This is going back. You really could kind of see this thing setting up. It's got support in the high 26s or $27. So this thing has about another 40 cents lower to go out here. Nice move off the last low. June 19th, 26.90, got up to 32.99. Energy never really came in strongly, very, very light volume. And, not really, we haven't gone through that low on higher volume, so this could still stick. But it could be an ABC down also. ABC down would take you to $22.43, which is the first one-to-one ABC down. But looks like it's probably going to go sideways here for a while before it decides what it wants to do. Of course, nitrogen and the fact that this is an LP, which is a limited partnership, should always bring up the hairs on the back of your neck. Anytime you see that LP designation, that stands for a limited partnership. They are buying or selling something that they have. We'll say that they have a bunch of wells that they own. They are basically trying to sell off a percentage of that income into the future. They aren't the normal company out there with a new product trying to grow their company. They are just selling what they have, and just over time. So basically selling a percentage of it, but not really trying to build a new company that does a lot of new stuff when you get into those limited partnerships. There's always another trade. What else we have? I was looking at Apple. We talked about this yesterday at some length, and that we had at least a short-term sell signal on Apple if it closed below 465. We certainly got that yesterday. Certainly no more energy down here today, but there certainly isn't not a lot of energy back up. Even if this thing had a nice slow pullback, 425 is probably the next tick down, and maybe that sets up an ABC to get us back up to that $500 and 507 area where we have a nice confluence area. That if I was going to try to pick this as a place to actually go short, it's $507 to $514 on Apple, and that's at the same point at the top of a gap. So I probably would be pulling the trigger on short on Apple, especially with them continuing to buy huge amounts of shares on the backside. What else do we have moving about here in a fairly quiet market? Silver fell 2 cents to 19.50 an ounce today. We were talking about gold. It did get down to my $1,275 target today. Closed at 12.89 on the COMEX market. So it did come down there and touched it. It has been on lighter volume. I would certainly like to see something a little bit more in the way of a sign of strength than just bouncing off the low out here for today. I'll look at the volume tonight in the contract, but nothing really excites me just yet. But it did get to my target, and some people had asked me about where did I get that 1275, so let's talk about that. And it was from the GLD contract. When you look at it, there is a nice little gap out here that we got close to. That's why I still think we have the ability to get back in it. But this sideways motion and gap and 50% retracement level just in the move set up 122.41. And, of course, we didn't get that today. We closed at, well, we're probably going to close at 124.25. So you still have a couple more bucks to get back into this gap. I think there's probably a high probability with the action I saw off the lows that we're just getting a little bounce out of here, and we still could get to that 122.41 on the GLD, which would set up at least a fill of that gap. And the question is, and why the reason that I'm getting nervous is if you look at this 122.41 area of the GLD, this thing has 1, 2, 3 gaps. This thing loves to gap back and forth over this 122.41 area. And the thing would be whether you wake up and it's on the downside of that at 120.59 at the 618 already. And I think that is at least a possibility. I don't see enough strength out of this to go fishing in gold right here. Ideally, I would love to see the retests of the low of 1,200 in gold again. In the case of GLD, it'd be back around that 114.68 low that we saw just a few weeks ago on June 28th. So there's decent volume down on that day. Normally, when you get a washout, there isn't a lot of belief in rushing in there. I saw way too many talking heads on CNBC and Bloomberg about rushing in and buying it there. And I'd love for them to come back one more time to that low and for them to all say, I'm done with it. And I think that would be maybe the all-time buy on gold for the move, probably at least back up to $1,800 for a retest. Actually, what is it, 1893 or something for a retest of the high on gold. So we'll take a look at it. But that's what I've been looking at in gold, and not a lot of volume, of course, not a lot of movement today, and I think there is at least a 50-50 chance that we could gap down over those previous gaps when the GLD opens up tomorrow. And when I see somebody like Paulson with all his holdings in gold, still hasn't sold any, there's something about the market that just doesn't let people like that out easily. And even though we got a little bounce here, he's continued to hold on. And my guess is until he's forced to sell out, we probably also haven't made a low in gold. What else do we have out here? See if anything else. Well, I don't see a lot in that, so let's clean some of that. Let's start looking at some other charts that are interesting me. We talked about this months ago, and that was these gaps. First, it was gaps at 108 on the TLT, the 20-year bond. We did get a little bounce out of here today, but it still looks like we've got 2 more gaps at 104 and between 102 and 103 on the TLT that are open. And so far, the TLT is obliged by closing just about every gap out here. It has a gap over a gap, leaving another one at the 111 to 112 area. So you have that probably as a first level of resistance if this thing does turn around. My guess is that we are awful close to a possible low in this TLT. But we're probably going to be getting in. Both those gaps just look too sweet. If you go back and look at the volume on those days, this thing gapped up and down and through those gaps. There was just an immense amount of movement. Those were in the 2011 September 9th, 10th, 11th, 12th highs. And if you go back and look at it, you'll see just how that volume actually shows up and how those gaps, although they're not huge, they did and come on very significant volume for the gaps up and down. And I think that's where this thing is headed, back to the 103 and 104 gaps. And you're going to be up against probably fairly decent support from what the TLT is showing. And that's probably where I would plant my flag also in the Treasury Bond Index. So keep a close eye on that one. This thing is finally getting back. I like this. The energy has been fairly strong from the 124.26 high of May 1st of this year. It's been a straight down move to 105 from a few days ago, but I still suspect we're going to get back into those gaps, 103, 102, and on a very, very light volume, I think you could find the first automatic rally out of this bond marketplace. Okay, what else do we have? Solar City. Of course, we were talking about some of the other solar companies and alternative energy companies, as they are called in the business. Solar City off a couple of bucks out here. This thing really has made a nice signal at the top. You didn't get a break at the top. You were about 27 cents short. The May 20th high at $52.77 was challenged, I say, by the May 28th high at $52.50. Now, that came in at 4.2 million shares. So you 7.3, 4.2, 27 cents light. The thing rolls right over. I would have liked to. In fact, I was watching it. I was hoping that thing would break the high on lighter volume to get short. Came all the way back to $32.66. It has been doing what I suspect a nice setup for an ABC down. And that would set up a fairly decent move. What is that, 52? Do we have that? 2 years maybe. Let me draw it here. I thought we had it. Got my B. Got my B here. And our C point was yesterday high. So that sets up a ABC 1-to-1 to $25.76 if it can break this previous low from June 24th at $32.66. So, I'd be watching Tesla tonight. We see some disappointment in that. We might see the rest of these companies that are in this space start to roll over also. That 1-to-1 looks awful good. There's a lot of gaps back in there. And I think you probably have a good shot at about $31 on this if we do see additional weakness, even if you don't get the full ABC 1-to-1 down. This thing did take off with some nice volume of about 6.3 million shares on May 13th of 2013, and that's going to be the first level of support. So what do you got? Got about $8 down to that, so not a bad setup just for that part. But just no energy on this B2C leg from Solar City, pretty much like the rest of those stocks out there that have been fairly high flyers that have come off the top. Retraced 65%, looking pretty good. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we close out this show, it's been a very light volume day so far, 2.25 billion shares on the consolidated New York Stock Exchange tape. So it is a lighter move down. We are still off 7 points on the S&P cash. Not a lot of volume coming in on the upside. And, of course, most of the volume early on in the day to the downside. But a little bit of a buyer's strike. And seller strike both in the afternoon with volume going very, very light. It's been an interesting Shark Week so far on the Discovery Channel. But what we have is something that happens once a month in the stock market, and that is the day that traders that trade and make a market in options go delta neutral. This is the point where they start selling arms to both sides and stand back and watch the carnage. And, of course, the options expire on the 16th. This is the 7th. So this is about the end of the time where they can take a big bet and pretty much close it down. I think we had a little bit of that yesterday, some more of it today. Options aren't real clear yet. I'll probably get a better read on them after the close today with such a light volume. I hate to say anything before the end of the day. But I think we're looking at a market that wants to pull back to somewhere around that 1660 level, even if I'm wrong with a bigger projection for a pullback. And mostly it looks like it could be one of these paper cut markets where we just come back on very light volume. But every day it is this 5, 6, 7, 8 point move, maybe 10-point move in the S&P cash on the way back down. We have some movement out there. We talked about gold, but not a resounding move in it. There's some other stocks that I'm watching that look like some blow-off tops have occurred in some of the hotter parts of the market. But, I'm looking for the GLD to really start turning and burning, and just really not seeing that kind of energy come in to it today. We've looked at Apple. As long as this thing continues to close below 465, you have a legitimate sell signal in place. We've looked at other stocks like Google that have had problems moving any higher. And probably the strongest case for further growth could be put in Google, although this last leg up was off by about 25% of the energy that the previous leg had in it, and of course the previous leg to that. So when you look at Google, the air is getting rather thin up here, but that's pretty much for all these companies. Microsoft, of course, took a beating on earnings. It's just kind of beating around, not doing a whole lot. Facebook is right up against the point where everybody that was stuck in this thing from the IPO price is just glad to get their cash back. Every time this thing pops up a few cents now, there's going to be everybody and their dog wanting to get out of this thing. We've looked at a few other companies that, look like they could be bottoming. But right now it looks to me like we've got a August of at least a paper cut where we're going to continue pulling back here for a while. Of course, with not a lot of news one way or the other, a lot of times we can focus in earnings on an individual stock, and that may be the story of tonight, and that is Tesla. It is some of these stocks that have like I said, it would take 10 years of decent growth in Tesla for the stock to be worth $135. So I'm going to be watching this one very closely. I don't have a horse in the race, but this thing, if it makes a nice move out of here, the next move probably could be to reality. So watch it very closely. Anyway, you have a safe and wonderful night. We'll be looking forward to meeting you again here. Same bat channel, same bat time.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.